Hey guys, thanks for checking out this interview today. We're super excited to have Joey Howington with Service First Mortgage joining us. We're going to talk about building a mortgage business from scratch. We're going to talk about what the market's doing, and we're also going to tell you about some really exciting things that we're working on at Service First. So really excited you guys are here to join us, and excited for you to get to meet Joey. Okay, so Joey, you're on our leadership team here at Service First, but want to jump in kind of into your backstory. So, where are you from?
Well, I grew up in Cleburne, Texas, and was born in '76, so I was a kid of the '80s, and I think I had the quintessential all-American upbringing, small town USA, great time to grow up. Skating rinks, bicycles, that kind of stuff, and one sister and two incredible parents. And what I would tell you is I got to be a witness or have a front row seat to two people living the American dream. Both grew up with really humble beginnings, found each other, and then grew a really successful life and a successful business. Raised Deanna and I, and it was kind of they were a walking testimony, really. And so it was a great upbringing. Grew up in Cleburne and graduated high school in 1995. Went off to college, and my college career looked a little bit like an NFL career. I bounced around a little bit from school to school, and then inevitably graduated from the University of North Texas in 2001. Got a degree in logistics, which has nothing to do with mortgage whatsoever
Very true.
or finance. But the best thing I got out of college, Jake, was I met my wife, Christy, and genuinely that's the best thing that I got out of college. And she kind of helped correct me a little bit, put me on a path to success, and so that's kind of how we got our start. It was around 2001 when we got married.
So, I want to go back for a second. You grew up in small town USA,
Hmm.
and in a really great time to be in the United States.
Yeah.
So, you grew up also the son of two entrepreneurs. So, how do you feel like that's affected you today?
Well, I don't think I would be in this industry had I not had that experience watching those two build the business. When I graduated from college, I went into medical sales. And I did that. And well, first I went into pharmaceutical sales, and I did that for about 2 years, had success there, then bounced over to medical sales. But I always kind of had this itch in the back of my mind that, I need to be doing something outside of, I didn't label it as corporate America, but I felt like I needed to be doing something on my own. And so without their influence, I don't think that it would have ever taken me out of the career path that I had, which was wonderful. I liked pharmaceutical sales. I loved what I did in medical sales, but because of their influence consciously and subconsciously, it kind of took me into into this career.
So you have something I know is you've got a little bit of a commercial real estate background.
Hmm.
So how did you end up there, between medical device sales and now being in the mortgage business? Do you feel like doing commercial real estate was kind of on that path, or do you feel like you were still kind of looking at that point when you jumped into that?
Well, I can say it wasn't intentional. It wasn't a goal that I had when I was in medical sales to go into commercial real estate. I had a good friend who was successful in commercial real estate, and he continued to kind of pull me in that direction. And after a few years of him leaning on me, I inevitably took the leap of faith. And it was a leap of faith because when you're in medical sales, you kind of have guaranteed income. And then when you have a young family, at that point in time, we had one child with one about, kind of one around the
Yeah, one
corner.
one on the way. Yeah.
And I took a really good career and I turned it off and decided to make $0 for the next 6 months. And it was a leap of faith. And so that's kind of, but through him courting me and kind of painting a picture for me, and it kind of touching my soul a little bit as to you can kind of create your own opportunity, run your own business. That's inevitably what pulled me over to it.
What were you doing? What did you end up doing in commercial real estate?
Yeah, so initially it was always retail, and because my real estate partner, he was focused on retail, and primarily what I did was I looked for pad sites for single tenant retail users. So it started off like that, and then it morphed into development. And so our business model was really simple. We would go put property under contract and then try to sign someone up to a ground lease or build a suit. And then we would buy that property, we would hold it for a year and a day, and then we would sell it to a 1031 investor. So that was the business model. And it was a really good business model right up until 2008. And then it was no longer a very good business model for a
Where
moment.
where everything changed for sure. Do you like still ever think about the commercial real estate space being where you're at now with your background? Because I know commercial real estate is under a lot of pressure right now. Um, is that something that ever crosses your mind anymore?
I don't long to be involved in it, but I think I understand it pretty good just because of my background. And when I evaluate opportunity outside of mortgage, just from a personal perspective, I think I can underwrite commercial real estate probably better than the next guy that hasn't been involved with it at that degree. And so I think about it in those terms, but I really don't, Jake. I don't think about it in a sense that I would love to get back into commercial real estate.
Yeah. So
Yeah.
what were the years that you were in that
Yeah,
space?
from 2004 till 2011 or 2010.
So you stuck around even through 2008. So the great financial crisis, the
Yep.
Great Recession comes along and things get tough, but you stuck around.
We stuck around, and so we sold four good assets in 2007, and it was really good timing. It wasn't great insight. I didn't know enough for it to be great insight. And then in 2008, when the market kind of fell apart, both Dusty and myself, who was my real estate partner, we said, you know what we'll do? We'll go build home offices and we'll work from home. And that was a great experience too, not because it was productive, because really it was not that productive. And it was a good time for me to reflect later in life as to kind of what works for me personally. And when COVID came through and everybody deployed into their home, I could revert back to that time period in my life and say, that was probably the least productive time in my life. And
Yep.
I think people are going to realize this with COVID. After a few years, they're going to have some reflection to think about how much more productive they may be when they leave their home and go to work.
Yeah, I'm an office guy too. I don't think that's any secret. So I definitely relate to that. Let's just camp on that for 1 second. I just want to hear your thoughts on it. So, what is your opinion in the mortgage business now? Everybody is so remote. I think I would say 80 to 90% of our workforce at Service First works from home.
hmm
What are your thoughts on how that affects the economy now, and what do you think that will look like in the future?
Well, first, I would give you my thoughts on remote work as it relates to our business. I think uh, reactive work is better suited for remote work. Meaning, if I have work coming at me and I have to react to it and perform that work, that kind of work I think is very good to be done at home because you have less interruption. But for me, when I need to get into a creative space and it's optional if I go create opportunity. I need to be around other productive producers, so to speak, to help me get in that state of mind on a consistent basis. So I think going forward, I think people will inevitably come to the same conclusion that creators need to be around other creators,
Mm.
and people who are inevitably working on other types of work that allow you to react to it are going to be better suited in an environment where there's less interruption.
Yeah, I would say every good idea that we've come up with in the past 2 years has come from a whiteboard in the office, and I've probably worn a hole in the carpet between my office and yours to probably the detriment of your productivity. So I appreciate you
Jake,
you
you're the
helping
reason
out.
I'm going to work from home again.
That's right. I sent Joey back to home this week because I kept knocking on his door asking for advice. So okay, so let's go back for a second. So you're in the commercial real estate space. You decide to go work from home. Realize that's probably not a good probably not a good model. 2011 comes, and what
Hmm.
makes you decide to get out of commercial real estate at that point?
Yeah, probably still the influence that my parents had. They built a local business, and commercial real estate, although a lot of it's done locally, it's not a traditional brick and mortar business. And I was looking for that next business, and I would tell you it wasn't something I decided to feel. It was just something that I felt, and I was urged to do. I was moved to do that, and so then I jump into another career that I know very little about. That there's no income guarantee whatsoever.
It seems to be a trend for you. You
I
kind of
know.
like to jump into new things with high
I'm
risk.
I'm gonna try to stop doing that. So at this point in time, the boys are older. I've got Coop and Kai, and at this point in time, I start with Sendera Funding in 2013, and that kind of scratched my itch a little bit to build a local community business. It was in Aledo, and we opened up a 1,200 square foot office. And Ben Allen is the reason that I got into the business. I grew up with Ben in Cleburne, and so he was telling me it's a wonderful business to get into. And so I gave it a shot. So we opened in 2012, and literally, it's me and another guy that decided to do the business at first initially. He got out of the business pretty quick. And then I find myself with me, a desk, and, you know, walls in a room trying to figure out how to make the mortgage business go. And it's not the traditional way to get into the mortgage business. Most people get into it and they're surrounded by ops people and by other producers. But I think that because I was alone and left to my own creativity, and I didn't have a deep knowledge of underwriting and I didn't have a deep knowledge of loan products. And so I was forced to go out and grow the business in a way that was meaningful because I had to support our family. And I just did that through the best way that I knew how, which is how can I help you grow your business? And so I became an educator in the market and I focused on that with our referral partners. And fortunately, by the grace of God, it worked because I needed it to work. I'm the provider for our
Yeah.
family. And that wasn't an easy thing to do the second time
Yeah.
when you have more responsibilities as you get older. And so it worked, but it didn't work initially, and so it took some time. And like many people, whenever you're starting something, it's harder to get the plane in the air than it is to fly it. And so getting the plane in the air wasn't easy, but then we got it in the air, and then we flew it, and then we banged it around a little bit, and we flew it, and then we banged it some more. And so, but over about a 5-year period, we took the business from $0 to about $100 million in production on an annual basis. So it was successful, and I really love that. I love that time period in my career because it was me, and then it was someone else, and then it was someone else, and we were in really tight spaces, and we worked in really tight spaces.
Yeah.
And I love working in tight spaces. You can feed off one another's energy. You can help somebody when they're suffering, and you can celebrate with them whenever they're having
Yeah.
success. And so I'll always look back at the start of that career and have really good feelings about how inevitably it took us to where we are now.
Yeah. I've heard so many entrepreneurs and company founders talk about their starting their business and looking back on those days extremely fondly. On the other hand, when you start out, often you're doing it all. You're the receptionist,
Mm.
you're the loan officer, the processor. So do you feel like that? Do you look back on those days when it was just you and the phone with fondness?
I do. I'm fond of those memories, but I don't forget the struggle. I
Yeah.
remember the anxiety of I need to go out and grow the business, but when I leave, there's nobody here to open the door. The
Yeah.
door's locked. And I
Yeah.
have posted hours from 9 to 5.
Yeah.
And I had tremendous anxiety about somebody coming up to the door and it being locked as if we were not open for business. And so I do have fond memories of it, but there was some anxiety along the way for sure.
Yeah. Okay. So you start a branch, which in the mortgage business is a lot like starting your own company. I mean,
Mhm.
it really is. So you do that, and it's day one. You've got your office and your phone. What did you do? What did you just did you get a whiteboard out and start figuring out who to call? What did that look like?
It was purely reactionary. These are the people that I know that are in the real estate business. I'm going to call them. And then thankfully, they were really nice to me. And then they would say to me, you know who else you need to call? And then I would call them. And so it's really not that complicated. It's not easy, but it's not complicated. And so I would make those phone calls. And probably because I had had success in two other careers, I wasn't fresh out of college and I had some relationships that I could call on and then be nice to me and be receptive to me. And so that worked. And it worked slowly. And over time, those people began to send me, more of their business and connect me to other people. My first real client, I think, was Kenmark Homes. And that was 10 years ago. Before we sat down to film, I was on the phone with Kenny a moment ago, the owner of Kenmark Homes. We've done their business ever since 2013. He was my first client. And what's interesting is they were, in retrospect, that was a big client to get right out of, passing your test and becoming opening a branch.
Yeah.
Genuinely knowing what I know now, I wasn't ready to manage that kind of business. But, it worked out. And one of the things that helped me be successful was I was so afraid to mess it up. Genuinely. I didn't want to mess it up for the person who sent it to me, and I didn't want to mess it up for the client. And so I would stress about that at night, weekends. And I think if you don't have that element to your personality, it's really difficult to be successful in this business. Probably most businesses, but this business for sure.
Yeah, I think that's a challenge for people in real estate, probably in a lot of businesses, but the real estate and the mortgage business especially, because everything is so urgent. When people want to purchase a house, like it's now, they're ready to submit an offer. They need to know that it's going to work. So oftentimes you're working urgently, but it's also really important and it takes a lot of attention to detail. Did you ever did you ever have to make any of those uncomfortable phone calls when something didn't work?
Yeah, for sure.
What advice would what advice would you give, looking back, would you give yourself, or would you give somebody who's kind of starting out, inevitably knowing that there's going to be kind of those uncomfortable phone calls at some point?
Yeah, I think for somebody that's starting out, I would leverage the experience around me. Number one, is as best you can. Ask the question that you just asked me. What are some of the moments in time where you let somebody down? Not intentionally, but how did it happen? And then put that into your process early. And then be obsessive about the details, like you said. And so if you do those kind of things, you won't eliminate the mistakes, but you'll minimize them. And then as you have your own mistakes, how quickly can you respond to those mistakes with honesty and clarity? One of the things that some loan officers do as a mistake is they'll make a mistake and then they don't want to communicate it because they're nervous and they're trying to fix it. And inevitably what they're doing is creating a bigger problem because we operate in a time capsule. You have to perform typically within 30 days. And so be honest and upfront with people. And so those are some advice points that I would give. And then just know that you're going to mess up. At some point, you're going to mess up. And it's okay. Nobody's perfect. Just make sure that you communicate throughout that process and make sure you're good to people and honest with people. And inevitably, people will remember, hopefully, how you handled it more so than the mistake that you made.
Yeah. That's great advice. I was told when I first started in this business that there's no good news, there's no bad news, there's just news. And if something does go wrong, it's just best to make that call. And 9 times out of 10 you can fix things with just really solid communication. So I think that's really good advice. So I want to go back for a second. You talked about you start your branch and then you start finding these partners. So you've been doing this for a minute now. What were you looking for in partnerships then? And what would you say makes like a good partner now?
Yeah, I would say that what I was looking for in partnerships then is pretty much what I'm looking for partnerships with now, which are good people that I like working with. And beyond that, it's good people that I like working with that are aligned in how I go to work and what my vision is, and also the amount of business that they do. You know, one of the things as a loan officer you have to be mindful is your time. And it sounds very cliche, but you have to be very careful with your time. And so it's very possible that you can enter into relationships that are not profitable from a business perspective or a relationship perspective. And so I think one of the things you do is as you kind of get seasoned in this career is become more aware of what those may look like at onset a little bit. And then as you have that clarity, you move towards things that are that provides you what you're looking for a little faster than just digging through the weeds a little bit. And so some of the relationships that I have today, like I mentioned one earlier, I really kind of stumbled into that one, and that was a blessing. Honestly, that relationship was a blessing because I love working with them. I love who they are as people. I like talking to them,
Mm.
and I like how they go to work, and I like the kind of business that they do. And so now I just continue to seek out more relationships like that while building out processes internally that allow us to go to market a little differently,
Mm.
but allow us to build more of a process driven business uh, that allows us to scale our business in a way that we have more control over, so we can provide more predictive outcomes to our customers.
So you start out, you have, you kind of come into this great relationship, maybe even out over your skis a little bit. But that seems to have been something that's been a theme throughout your career is that you've now have something that I would call strategic partnerships. So you've got a lot of relationships with builders and just in the community. And so I would say your mortgage business looks different than anyone I've ever seen. Uh, and so I guess I want, just for the people listening and watching, what is, why have you intentionally designed your business differently, which I think you have, and what does it look like now?
I have intentionally decided to do the things I like doing and avoid the things I don't like doing. And so, fortunately for me, we're surrounded with people here that are really good at the things I don't like doing. And so, what I love to do is bring value to people. I love to get creative. I love to find ways to help them grow their business. I like to find ways to help them better communicate to clients, to shorten their sales cycle. I love doing those kind of things. And what's interesting is a lot of that doesn't have to do with the operational aspect of the back end mortgage aspect of it or the back end mortgage
Mhm.
piece of it. So, but we have a wonderful ops team here. And the more that I'm involved in ops, the less I'm involved in going out and generating new strategic partnerships and solving problems for those strategic
Mm.
partnerships that allow both of our businesses to flourish. And so that's what I like doing. And fortunately, there's a place for people in mortgage. If you can go out and do that, if you can surround yourself by great ops people, and there's a place for you in mortgage if you're a great ops person and you have no interest in doing the other side of the business.
Yeah. So we do have, we've got a great ops team here. What, something that's unique to your business and to Service First in general is the amount of builder partnerships we have. So you're a big part in that, in finding those relationships and maintaining them. I think we have somewhere around 45 builder partnerships, which is a lot of them. So what does your role in that look like? And what does it take to kind of take the business into those bigger accounts, into those strategic partnerships, instead of a traditional retail loan officer that may be doing consumer direct or calling on real estate agents? You seem to have really found a niche in the builder space. So what does it take? What does it take to be able to do that, and why do you like specifically working in that space?
Yeah, it's a good question. I like the people in that space. I relate to them. They're involved in construction.
Mm.
A lot of those guys are probably more blue collar guys, and I relate to that from where I grew up. So I relate to what they like doing. I relate to who they are, and so I kind of gravitate towards them a little bit. I like the fact that I can go and help them and scale our business on a larger multiple by having one call point. I do like that about builder business. I was surrounded by it in Aledo, which is where we live now. And so it was a kind of a natural fit for us. When I first started working builder business, we were working with anybody that built 3 to 5 homes to 100 homes. And, I got to learn that side of the business really well. Now we're pushing into builders who are building 2,500
Mm.
homes, and it's a totally different offering, but it's all the same essence, which is if you're a builder and you're building 5 homes, uh, you have problems within your business that need to be solved.
Mm-hmm.
If you're building 2,500 homes, you have problems within your business that need to be solved. And so, really, the question is, how can we help you solve those problems to improve either your process or your sales numbers, whatever it is you're looking to improve? How can we help you solve that process? And inevitably, by doing that, we'll bring value to you.
Mm-hmm.
And so I'm just focused on that. And what I would tell you is anybody who's getting into the business, as you grow your business, be comfortable or at least not intimidated by a prospective future referral partner. Don't be intimidated by the size of their operation, because typically the size of their operation will lend itself to more problems. And you're only valuable, in my
Mm.
opinion, is when you solve problems. And so it may be a greater opportunity for you
Yeah.
simultaneously while you're afraid of it because of the sheer size of it.
Yeah. That's a great perspective. I mean, I just think about how many people that sit on the sidelines because they just feel like they couldn't do it, like
Mhm.
it's so much of, especially in the mortgage world, where you can literally make it anything. I mean, there are loan officers who sit at home and take applications from an online mortgage company. There are people who have go do happy hour every day. There's people who go meet with builders and business owners and build a business that way. And so it's just I don't think it's by accident that you've probably landed where you have. Coming from, I just think you have an interesting background. You came from business to business sales, from business to business sales to commercial real estate, and now you've taken the mortgage business, which is traditionally a business to consumer business, and have made it into a kind of a business to business role. I think that's really really interesting and really unique to what you've done.
Yeah, I think what I love about working here too is it's a blank piece of paper. I really love that about working here with the
Yeah.
people that I work with. I would say we're very non-traditional. We operate more, not quite like a commercial real estate firm, but definitely more like it than most mortgage companies.
Yeah.
And so it's a blank piece of paper, and we come up with ideas. We put those ideas into motion. Some of them work, some of them don't. And then we try something else. And I love that about it. I don't want boundaries in life. I don't want to roll. And I think most people are like this. I don't want to roll to where you put somebody in a box and say, this is your role, this is your call point, this is how you do it. I want the freedom associated with your own creative thoughts and your own effort and what you can do with it. And what's great about working here, Anthony, Billy, Ben, you, the people that we're surrounded by, they feel the same way. And that's I would say that's non-traditional. It's very non-box oriented. We're out of the box. You see some of the crazy ideas we come up with, and well, you're involved in one right now where you guys were in Austin last week.
Yeah.
That, Jake, is very non-traditional.
Yeah.
Like that's 1% of all loan officers are involved in something at that level. And so you come from the same cloth, and I think that's one of the reasons we appreciate you so much.
Well, I appreciate that. It's been a lot of fun. I think it's been really a lot of unexpected, I don't know, blessing, if you want to call it that. Like, when I showed up since I have an engineering background, so I was doing business to business sales engineering, and I actually looked into commercial real estate. That was something that I was really interested in. That's what my wife does. So I had 2 interviews in the same day, 3 interviews in the same day. I had 2 commercial real estate firms. I was late to one of the commercial real estate firm interviews, so maybe they wouldn't have chosen me anyway. But and then interviewed with Service First, and thought, man, there's no way I'm going to do the mortgage business. I was just going to humor, I was going to humor Anthony, and and do the interview. And when I started, I quickly realized that same thing though. Like you can do anything with this job. I mean, you know, if you can, and the reality is everybody everybody is a client, everybody is a customer, everybody in the United States of America, whether they just got here today or they're a 15th generation American, wants to be a homeowner,
Sure.
on some level. And so how you get there is super interesting. Anyway, I think you've built a unique business. I look up to you a ton in that, and have tried to, you know, find my own flavor of strategic partnerships. So I want to talk about this for a second. So we've got a lot of really cool things
Mm.
that we're doing as a group. A lot of things that you're not going to hear your average mortgage company say or do. So, you know, I guess we can just start with one that is really what you're talking about is our partnership with Cleat. So what do you think the future of, or what would you like the future of our business to look like? You know, keeping in mind some of the new partnerships and things. Do you want to lean more into that stuff? Do you think that's the future for us?
I'm interested anywhere we can go, and it sounds cliche too, which is help people. You know, wherever we can go and help people and do mortgages, I'm interested in those vehicles. Um, I like ideas like Affinity, to where we can go direct to consumer. It gives us an opportunity to be pretty impactful in a way to get involved with people in ways that we may not have gotten involved with people, because if they don't come through our realtor partnerships and our builder partnerships,
Mm.
I don't know how we reach them, right? And so with Cleat is a really good example of that. And so I do like Affinity in that regard. Affinity, if you want to explain a little bit about what Affinity
Yeah.
is.
So the Affinity program is was an idea that you came up with, as far as I am aware. You probably know the background of it more better than I would, but um, Affinity is our way of going after uh, clients through different channels. So typically through an employer, really is what it was originally designed for. So we would go to a business and say, hey, instead of, you know, your employees going and working with some random company, that we'll put together a kind of a benefits package offering. And so, but I actually do want to ask you this, because it's really your brainchild more than it is mine. How did you come up with the Affinity program? Because when I first started, I was 2 weeks in, and somebody, I think you probably told us about the Affinity program, and everyone was kind of like, okay, sounds good. And for me, I was like, this is the future. You know, I thought that was such a great thing, and have kind of run with it. But um, how did you guys come up with it? I mean, when you came up with it, did you
I
think?
can't take credit for it. I mean, so Billy came up with it, and he came up with it in its first iteration. What I probably did was deploy iteration 2 and 3.
Mm,
And so he he had a relationship with a local car dealership,
hmm.
and he bought a car over there, and he said, for any of your employees that may want mortgage services, we're willing to offer fill in the blank. And so that was really the birth of Affinity. And so at onset, honestly, Jake, when I heard about it, I thought, you know, and I wasn't really that moved by it.
Yeah.
But then I started thinking about, you know, what if we created what I call a non-traditional employee benefit package? And then what really kind of stimulated that for me was COVID. Whenever we went through COVID, we deployed everybody into their homes, and you know, at that point in time, everybody worked in satellite offices. The whole company did. And immediately there was a challenge with how do you maintain culture and community when suddenly something as disruptive as COVID pushed everybody into their homes. Well, the first thing that we realized was parents that were at home with their kids, those kids were having a hard time studying because schools were trying to deploy
Mm.
content online, and they weren't really set up for it. And so the culture committee got together and decided, what if we paid for tutoring for our employees? And then about 10 to 15% of our employees took us up on it. And then past that, the next idea was everybody's working from home, everybody's living at home. What if we offered to pay their DoorDash delivery fees.
Which was my personal favorite.
It was
Yeah, I
everybody's personal
think
favorite.
I don't think it was good for my health, but it was good eating.
And so what happened was, fast forward a year later, our employees spent $750,000 on DoorDash because we got
Wow.
access to spend analytics. Okay. And then so it just hit me like, wow, non-traditional employee benefits are very impactful. And so if you ask somebody which benefits that you like the most, they would tell you DoorDash. And so what I realized was people expect things like
Mm.
401k, medical, vision, dental, that's baseline. And so if you can stack on top of that cool employee benefits, well, now you have something really a good story to tell. And so I then took that story and started telling it to ISDs.
Hmm.
And we built out this affinity partnership, and we took it to independent school districts, and we signed up Keller ISD and Fort Worth ISD and Aledo ISD. And then you came into the office one day and wanted to do it with a police officers association. And so, and then uh, you took it to a whole nother level with your participation with the Police Officer Association. And it was the seed that inevitably took you to a much larger relationship on a statewide level with
Mm.
CLEAT. And so, um, although what I think there's a lesson to be learned within that is whenever Billy created that program, it didn't seem exciting and it didn't seem flashy, but the idea of it was very sound. It just needed a little bit of watering,
Mm.
you know? And then with a little bit of watering, it came into bloom. And now, as a result of it, we're going to get to, you know, save a lot of police officers a whole lot of money on mortgage fees and real estate fees. And as a result of that, it will help them build net worth in real estate, which happens to be the largest net worth generator that anyone can experience according to the Fed throughout their lifetime. Most of their net worth will come from real estate.
It's crazy to think about how far this is, how far, how it, I just, how it started out as such a small thing and has grown to what it is now. For those of you who don't know, CLEAT is the Combined Law Enforcement Agencies of Texas. So it's basically the union for law enforcement officers across the state of Texas. They have 27,000 members. So we've recently signed up an affinity partnership with them. So we're really excited about that. But it's funny how it started out as a good idea buying a car from a dealership and is now a statewide program for police officers. That's just so
It's pretty cool.
it's pretty cool. Pretty cool. On the shoulders of giants, we stand for sure. So, well, that's I think we'd be remiss to not talk about the affinity stuff. I do want to. Everybody wants to know always what is going on in the real estate market. So we're here in Fort Worth, Texas.
Mm-hmm.
So if you had to throw out Joey Howington's opinion on what the next 18 months to 36 months is going to look like in residential real estate,
Mm-hmm.
what would you say?
Well, I think we're going to see more transaction volume over the next 18 months to 36 months than we saw the last 12 months. Some of that's being driven by inventory. So inventory in our market's up about 26%. Okay. And so when we have more inventory, that means there are more sellers. Sellers inevitably become buyers. And so we'll have more transactions over the next 12 to 24 months, is what I believe. You're starting to see some of the lock-in effect deteriorate a little bit.
What's the lock-in effect?
The lock-in effect is just, somebody was in their mortgage at 2.8% or 3.2%, and they're thinking about moving. They don't have to move. They take a peek on the internet. Home prices have risen considerably. Mortgage rates have risen considerably, and they decide to stay put. In fact, the reality is they probably, if they had to buy the house that they're living in today, they probably couldn't afford it
Mm.
at today's prices, at today's mortgage rates. So that's the lock-in effect. The lock-in effect every year will continue to fall as more and more need-based buyers
Mm.
move because of needs. And so you're starting to see that happen. You're starting to see there's good data around consumers and their relationship with interest rates. Consumers are home buyers are much more sensitive to rate volatility or rate action, price action, then they are absolute rates. And so what happens, you can see it in the data. You can see it right now. Mortgage applications are down 20% nationwide since January of this year, simply because mortgage rates have risen about 65 basis points since the beginning of January. You see that in the application data. And effectively what happens is mortgage rates rise like that. News articles, Instagram, everywhere where you consume data, you'll see articles written like mortgage rates are the worst that they've been since fill in the blank.
Yeah.
And so consumers don't know what that means to them other than it's more expensive, it's negative, and they pull back. And so as mortgage rates begin to fall at some point, you'll see more and more engagement in the market, which will inevitably spur on more demand as well.
So with higher interest rates as a mortgage company, how have we, like, what are we doing to solve for that?
Well,
Or how has financing changed with higher interest rates?
yeah, you're starting to see, or you're not starting to see, over the last 12 to 18 months, you've seen the resurgence of temporary buy downs to where sellers are contributing money at closing to subsidize somebody's mortgage payment for up to 3 years. You're seeing permanent rate buy downs where sellers are subsidizing permanent rate buy downs. Builders are really doing well in this environment because they can understand the challenge with affordability. And by the way, affordability is at its lowest level since 1980, 1981 right now.
Wow.
Yeah. And so
It's back when you were in Cleburne.
that's right. I was 4 years old and didn't really know what affordability was. uh, so inevitably what happens is if you want to solve demand in this market, you've got to create interest and you have to solve affordability. The way you do that is through lowering the interest rate or lowering the home price, right? You can't increase someone's wages. And so the two variables that you can play with are those two things. And so builders right now are offering big incentives. And what's unique about a builder is they can understand a concept, they can deploy it, they can market it, and they can do that over thousands of homes. So they do have a strategic advantage in a market like this over an individual seller who has to understand it, then try to figure out how to market it. And what we're seeing with some of these builders, they're offering big incentives, up to $25,000 to reduce your interest rate.
That's crazy.
Or your cash to close. And as a result of that, they're winning in the marketplace. You really see it in the data from November of 2021. You see where new home sales kind of moved up in a linear fashion while existing home sales begin to fall off.
Yeah.
And so we still continue to see that trend and will probably continue to see that trend provided mortgage rates remain above probably 5.5%.
So do you think now is a better time to buy a house than, say 2020, 2021? That's when it was the buying frenzy. Is now better? Is now worse?
I think it's always a good time to buy a home. And that sounds cliche also, but I'll tell you why I think that. And one of the things they should teach you in school, and maybe they did, I wasn't listening, if they did.
I think they did, yeah. But
okay. Which is, you should always buy assets relative to the value of the U.S. dollar. And so, the Federal Reserve, they're mandated by Congress for maximum employment and price stability, okay? And so if you go to the Fed's website, what you will find is within that mandate, they anticipate or they have a goal of inflation running 2% on an annual basis. That's a really nice way of saying we want to weaken the dollar by 2% on an annual basis. So over a 5-year period, what they're saying is if we meet our target, we need to weaken the dollar by 10% every 5 years relative to assets. And so you can't really game the market. You can't say is last month a better month than this month to buy a home. You can't do that. I mean, there's too many variables involved in that. But what you can do is place a bet on the Federal Reserve pushing for inflation. And if they do their job, real estate will improve in value, not necessarily because the asset improves in value, but it will improve in value relative to the purchasing power of the U.S. dollar. And that's really, really important to understand.
So in layman's terms, for a guy like me, uh, it sounds like, people say it's always a good time to buy a house, and it does sound so trite and so cliche, but it's inherent in our economic system, even such that it's been, like you use the word mandated. The Federal Reserve's been mandated to ensure that buying an asset like a house, it continues to grow in value. So I think it's really interesting to, nobody ever explains that. You hear all the time, "Oh, now's a great time to buy a house," and the second best time to buy a house was yesterday, and
Mm.
people just kind of say that, but to understand why that is and understand the macroeconomics behind it is really fascinating.
Yeah, so that's the macroeconomics. Then the second piece is I don't think anyone should ever ask the first question. The next question is now a great time to buy this specific home? Because real estate trades on an individual home
Mm,
basis. And if you're out trying to buy a home, and you're doing it purely based on economics, you can go into the market and find what you would call better deals. Something that's priced below appraised value, while another home may be priced above
mm,
appraised value. And so, if you're solely focused on buying it based on economics, you'll still get the macro ride that I'm telling you about. But even within a market, there are deals to be had in real estate. But what's so interesting about residential real estate, it's not purely about economics, you know. And every home I've ever bought, I was patient in buying it because I wanted to feel great about the home, and it wasn't purely based on
mm.
economics. It's the backyard. It's like, do I want to raise the kids here? All those emotional
Yeah.
things fall into it as well. And so I think what the best thing you can do is find something that you love. Does it make sense economically? And then pull the trigger on it, because just know that the Fed is going to continue to inflate away the dollar because they don't have an option but to do that.
Yeah.
Yeah.
If you had to say, if you had to guess, like, what, this is a loaded question, and I'm intentionally asking it.
Yeah.
What do you think interest rates are going to do? I've a lot of mortgage lenders at the beginning of the year posted videos probably similar to this one that talked about how there were going to be 5 rate cuts this year. And kind of explained what was going to happen over the next 12 months. So, me asking you now, what's going to happen over the next 12 months?
Yeah. So, it's been volatile for the first half of the year. So if you look at what the Fed did in December, they come out and through their economic summary and projections, they said we anticipate 3 rate cuts in 2024. We get to January and we see 3 consecutive hot CPI prints. They weren't expecting that. Okay. The Fed has all the data in the world, and they weren't expecting what was coming in
Mm.
January, February, and March. And so if they can't predict it, there's no one on earth that can predict it. And so what I tell people is rates are going to do 3 things. They're going to go up, they're going to go down, they're going to go sideways. And some days they're going to do all 3 of those things in the same day. And so I think one of the things that I've gotten a little wiser with as I've gotten older is I don't pay attention to anyone's projections, because tomorrow's a mystery, genuinely. Tomorrow's a mystery, and all we can do is play the game that's in front of our face and make the best decisions we can based upon the data that we have. And so I don't really make any rate predictions anymore. I used to do that kind of
Yeah.
stuff and was right half the time and I was wrong half the
Yeah.
time, which means I could have flipped a quarter, you know. But what I found is rate predictions are just that. They're just predictions, and I wouldn't get caught up in it. I think you can sound very eloquent. I could probably present a really good case of why I think rates are going to go down and why they're going to go up, and sound fairly eloquent in both of my descriptions and not have a clue as to what they're going to do.
That is the funniest thing to me about our business, is that specifically, when people, I try to avoid it too, but make the boldest claims about things that nobody knows what's gonna happen.
Sure.
So that's always really funny. So speaking of rate predictions, I at one point, when I was really early on in my career, I went to A&M, have this engineering degree. I feel like I understand things and I understand how the market works. So we put together this, I don't know, 25 slide presentation. This is probably in 2022 about how the market was going to change and interest rates are going to get better and that 2023 was going to be the best year. Rates were going to fall.
Mm.
And all these people came to, I did this presentation over and over again. People came to it and they were like so excited about it. In 2023, interest rates went to 8.5%, almost two whole percentage points higher than where they were when I was making that presentation.
Yeah.
And I say that it was a very humbling. To this day, I have some people call me and they still say, "Hey, when's that gonna happen?" Kind of giving me a hard time because I went out on a limb and made a really bold prediction that ended up not sorting out.
I went to one of your events, and I've been to a lot of economic projection events too. Um, what I find is people are really looking for hope.
Mm.
That's what they're looking for in those economic projections, and so I think that there's better ways to provide hope than you know than explaining what rates may do in the future, because that could be a false hope. You know, And so there's still an opportunity to provide hope. You just don't need to do it with interest rate projections,
Yeah,
you
that's
know?
fair. You said home affordability is at its lowest level since 1980.
Yes,
When you were four, concerned about home affordability, I'm sure at that time. Um,
deeply.
we're we're you're probably more concerned about your Ford's ability to go off roading or something.
I was worried if I could get the playing cards in the spokes of my BMX bike so it sounded like a motorcycle.
You were really caring about the big things back then. Even
I
you were such
was.
a prodigy. Um, so home affordability is way down, and there's
Yes.
a ton of people who think they'll never be able to buy a house. A lot of people in my generation and younger look at it and say there's just no way. Um, what I'm kind of leading you here. What I know we've got some really cool projects that we're working on, and we don't have to flesh out all the details of it, but what do you think the solution to home affordability could look like, whether it's the stuff we're working on or other things?
Yeah, and so there's a few things. A lot of first-time home buyers are going to need gifts from parents to help with down payment.
You think, I mean, this is, correct me if I'm wrong, uh, baby boomers have an enormous amount of wealth.
They
And
do.
so that's something I've seen is more and more, it's become pretty common where that generation will be gifting. Do you think that's something that will have to be the case?
It won't have to be the case, but it will be the case for some who are fortunate enough to have parents who can do that. There's no doubt. And they can leverage some of that equity in a cheap way. I hope they get good guidance to where they don't do big cash out refinances or something. They can do more strategic plays to where it doesn't cost them quite as much money if they want to leverage some of the equity in their home. No doubt, certain people will be able to take advantage of that. That won't be an opportunity or a solution for everyone. Okay, uh, what you'll see, I think, in the future is the federal government will continue to come out with certain programs with 100% down, or 0% down programs. We're about to launch one in the next 30 days. Typically, those programs have income limitations. This one that we're launching is independent of income limitations, which is pretty unique. And so that's also a possible solution for some. And then we have people getting real creative, you know, and this is something that you're very involved in. In fact, you will originate the first one of these mortgages in the United States, and that's pretty cool. And that's through a program called shared ownership. And you may want to kind of just talk about shared ownership a little bit, how it came to be, and how you think. I'm going to interview you for a second.
Yeah.
So how do you?
Wow.
Yeah. So how do? So talk a little bit about your experience getting involved in shared ownership, and then what impact do you think it's going to have?
Well, back to the affinity thing. This came to us through an affinity partnership. So we had a really strong partnership with the Fort Worth Police Officers Association, and we were approached by a group that actually wanted to present a rent-to-own program to us to present to the police officers. So through that, we thought, hey, that sounds great. But we kind of turned back around and said, well, when these people buy these houses, like who are they using for the mortgage lender? And we'd love to be that guy. I always say the open mouth gets fed. Never hurts to ask. So we ask, and they're like, "Oh, well, we can't really have a preferred lender." And we're like, "No, I'm pretty sure you can. We were preferred lender for a lot of people." And so the leadership for that company, we set up a lunch. We were going to go just kind of get to know them. And on the way out, I grabbed Anthony Aldridge, who is our director of sales, and I said, "Hey, you want to go to lunch with these people?" And he just, on happenstance, decided to go. And so we go to this lunch, and man, they threw out this crazy idea of shared ownership, which is essentially where somebody can purchase only a portion of a house and only really have to pay for that portion of the house. So if you can't afford the whole thing, but you still want your own home to live in and participate in the appreciation of, you can do that through this program. But of course, when they presented it to us, we're thinking there's no way. I mean, that's the craziest idea. But over the past really 9 months or so, we've been able to from the ground up build a program where somebody can actually buy a portion of a house. And so I went to the Texas A&M Real Estate Research Center Economic Forum the other day, and the guy giving the presentation was talking about affordability and really talking about how nobody's trying to solve that. He was like, nobody is trying to solve that. And I kind of cracked a smile in that presentation. I thought, I wonder what he's going to say in 5 years if this program works out. But I mean, that's essentially how it works. And what's been really cool about it is it typically works best in new construction. So we've got 45 builder partners. So it's been cool to marry this new idea with our builder partnerships. But it's something I'm really excited about. It's definitely uncharted territory, but could has the potential to be the way that people my age and younger can afford to buy a house.
And I think it will become that for a lot of people. And so it's a new concept. It's difficult to get your mind wrapped around at onset, but once you wrap your mind around it, you see the value in it. And Europe is a good case study for this. What is it? 40,000 homes over there are financed.
Yeah, it's
this way.
a huge thing in Europe where Europe doesn't have they don't have the land. We can just keep building and building. They've had the issues that we're running into now. They've had them for a while, and so this is a really common thing there where people will purchase half the house. I think over there it's government subsidized, so the government's involved in it. I wouldn't be surprised if at some point the program we're working on ends up that way. Right now it's kind of handled through the private sector, but I mean, obviously I don't know what the future holds, but that's how it's done in Europe, and I wouldn't be surprised if that happens here too.
Yeah, I would agree. Yeah.
So,
but it's very exciting. It's new. There's going to be a lot of education about it and a lot of questions about it, and inevitably, I think the people who take action, it does allow them to build net worth in real estate as an alternative to renting. And so it is good. It's net positive for sure. They get the pride of home ownership. They also don't have, because they're buying new construction, or less warranty issues. This particular group will help maintain that property. And so there's a lot of reasons. And so I would recommend it to one of my children in the event that they didn't have somebody to help them, with down payment assistance and all that stuff. It's now that I really understand it, it is net positive. And so there just needs to be some education about it when it hits the market. And it's going to hit the market in about 45 days. I mean, we're kind of, we're at the end.
That point now. Yeah.
Yeah. And so people are going to start hearing about this thing. And so you're going to get to be the first person to originate one in the United States.
That's really exciting. We'll see what happens.
Yeah, we'll see what happens.
We'll see what happens. And in 5 years, we could all be reminiscing on the time we did that one mortgage that one way, or it could change the whole thing. But we're definitely really excited about it. So just wanted to touch on that. So we talked about the builder partnerships, and that's a space that you play in a lot. But something that kind of born out of that is a really cool idea that you've told me about which is SFMC Home Tours. So why don't you tell us about that?
Yeah, and so that, the idea of that was brought to me by a third party marketer. He's an independent marketer, and the solution married with the problem really well. And so one of the things that I do on a monthly basis is I'll visit and present updates on market data to real estate offices, and it gives me an opportunity to visit with agents. And consistently what I hear from agents are they want to get more involved in social media. They're not really sure how to, or they don't have time to create content. That's a problem for them. And then the other thing that I've been exposed to is, as we move into this future, it will become more digital. And what I would say is how do we participate in digital in a meaningful way to where we connect to consumers, because the reality is it's difficult for a mortgage company to communicate with consumers because what we talk about are mortgages. And the reality is, although most people have them, they don't want them. It's not an interesting topic, their mortgage. And so what we've done is we've created SFMC Home Tours, which is a platform on social media to where we go out and film properties. And we then take that content direct to consumer and show them what's available for them, in addition to what you can see on Realtor.com and Zillow, the traditional outlets. And it gives them a really nice, short, descriptive tour. And then we're adding in some elements of finance to it to where you could see, I am interested in buying a home in Parker County or East Dallas, and that home is really inspiring to me. And wow, I did not know that you could buy that and have a $2,500 a month mortgage payment. And so it's impactful in that way. What's really unique about it too is circling back to what I was talking about a moment ago, which is solving the agent's problem of content. I think we've created 100 reels roughly of property film, and then we don't brand it, and we put that in a repository online for agents. Any agent in our market is welcome to go online. They sign up for it. Then they can download those reels and post them on their own social media. And it provides them content so they can grow their own social media. That's useful for them because now they can better tell their story in a way that's impactful, not just through some of the traditional channels like what I mentioned earlier, which are stagnant, like Zillow and Realtor.com, which are very effective, but it gives things like Instagram and TikTok give agents more flexibility in how they want to market their properties and grow their brand. And so we hope that in addition to this, it supports our builder partners too, the properties that we film, because we're marketing their sites directly to consumers through Instagram, and the agents are sharing their properties. And so we feel like it's kind of a unique solution to where it's better for the consumer, to where they're getting some educational content mirrored with home tours. It's better for the agent because we're providing them content, and it's better for the builders because we're advertising their properties. And so we like it as a strategy. It's one of those ideas that we talked about, blank piece of paper, make it a lesson, or we may learn that it is a great solution. You have to tweak it a little bit. And so, but we feel really good about it.
I think it's so important in the increasingly digital space. I mean, I know a lot of real estate agents now who get all of their business from social media, from Instagram Reels and TikTok and those sort of things. That's just the space and the world that we live in. Interestingly enough, you ask Gen Z what their number one career would, if they wanted to be when they grow up, basically is an influencer. That's the number one thing that people want to do. And I think it's just because we live in such a digital world, for better or for worse, it's where we're at. Yeah. And so I think it's very important for us to be in that space and for our partners to be in that space too. I think SFMC Home Tours is a really cool way to bridge the gap and get us to where we're able to be in that space, and our partners as well.
We hope so.
Yeah. We'll see what happens.
Yeah.
We'll see what happens. Well, thanks for talking about it. Hey guys, thanks for checking out our interview today. We plan to roll out more content like this, so continue to monitor and subscribe to our YouTube channel. And then you can also check me out on Instagram at JakeLittleSFMC. Thanks for watching.